The Trader's Edge with Steve Rhodes. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. The Trader's Edge. Now, Steve Rhodes.
Good day, Money Masters and Treasure Hunters. Welcome to the April 14th terrific Tuesday edition of Hour 2 of the Trader's Edge. I'm your host, Steve Rhodes. Hope that you're off to a great start of your day. Let's make sure that you and I do everything we can to have an extraordinary Tuesday. Let's always remember what's talked about is a dream. What's envisioned is exciting. Of course, what's planned becomes possible, but what's scheduled is real. And I want to really thank you for scheduling your time with me here this morning. I'm absolutely here to serve you, honored by your presence. Feel free to pick up that phone and dial on in at 877-927-6648. Of course, internationally, you can reach out to us at 727-445-1044. Remember, if you've got a question, I guarantee you, somebody's got that exact same question. So go ahead, a random act of kindness. Go ahead and call in for them. That's the way to start your day. It's the way to live your life, my opinion. And, of course, this is Terrific Tuesday. It is Tiger Financial News Network. Welcome to the Hotel California. I'm Steve Rhodes. Welcome to the show. Right now, the Dow is up 55 points, trading out at 17,921. S&P is down 8, trading at 2,084. Composite off 31 points at 49.57. Russell 2000 down 7 points, trading at 12.58. The DAX is off 115. Let's go see what it means as 10:09 a.m. this morning. Here we take a look at the DAX. I'm not the DAX. We take a look at the New York Stock Exchange, the NASDAQ Composite, and the Dow. What you will see, we start off with the Dow here. We can see that the price oscillator has got a minus 0.32 reading. It's below the zero line. I do not know how the market is going to end the day. But if it ends right here, this would tell you that the buyers, I should say, have lost control of the market. They lost control of the market. We'll see how long that will last. I expect it'll last about a week or so out there, but only time will tell. Right now, the tug of war, that line of demarcation, that zero line, is what's under attack. It's all about how does the day end. Again, if the day ends where we're at right now, well, give me a moment here to try to. How do I do this now? Oops, excuse me here. We've got to do this here. Need to make a quick adjustment. There we go. Close that. Okay, good. We're back to square where we need to be. So this is an important day here inside of the Dow. If this level holds, that is very bullish. If this level fails, it says you run down probably to the most recent lows. We've been trading down around the lows of 17,627. That's the about 300 points to the downside. That's what you got to expect as the move down there. If we take a look at what's going on inside the NASDAQ Composite as we speak right now, its price oscillator also below zero. That's after the NASDAQ Composite had tested its swing point high from March the 20th. What does that say? You get below the zero line. If you end about right here, it says you probably get down and you test the 4840-ish type level. Maybe you get all the way down to 4825, the March 26th area. If we take a look at the New York Stock Exchange, just ever so slightly above the zero line. This is the one that will give us the best indication as to what the market wants to do. As we speak right now, net declining issues are 127. What is the number? I think it's like 132. It is 132, and now it's down to minus 102. So you can see here the underlying strength of the market, really all about the New York Stock Exchange. So we'll really get our best message about the health of the market by taking a look at the New York Stock Exchange. Again, more than 132 net declining issues out here. That will go ahead and push the price oscillator down below zero. That'll go ahead and change the direction, the trend from up to down, and says you probably head back and you test that hammer candle from April the 1st. That becomes its target level. If this level holds, then you do not. I don't know why I want to say do, but that means you do not have any kind of of reversal in place. So that's what's going on there. We'll also want to focus by the end of the trading session at the VIX index. Yesterday, having quite a rally, finishing up about 10.6% out here. Right now, the key level to be watching inside the VIX is 1509. If you see it close above 1509, you have these, which would almost guarantee the price oscillators for the New York Stock Exchange, the Dow, the NASDAQ Composite, the S&P 500, all being below the zero line. That's where you can get the most amount of damage. If the 1509 level just simply continues to hold as resistance, and what we have is some additional chopping around for the next several days out here, maybe a solid full 4 or 5 trading sessions out here. But you get above 1509, that's when your biggest amount of price erosion can take place out here. From the first hour, what we are focused on during the day is going to be the rising price channel of this 5-hour chart out here. We know on the 5-hour chart, there are 3 areas that we are focused in on. Those 3 areas, meaning that we saw rising price channel as the blue diagonal lines. Right now, prices traveling below that. When you break the trend, that's another form of being able to break a trend out here. So that's one element to look at. Number 2, we have the 7th inning stretch candle. We have that G wave, in the 7th inning, the Chapman wave to the upside with a little bearish engulfing candle that took place by 2 o'clock yesterday afternoon. And additional follow through as we went into the 5:15 close of that contract. Now, what we can see is that prices come down to test its TAS market profile low. That's a support area. That's really at 43.81. You're at 43.80.50 as we speak right now. This candle session does not end until 2 o'clock. So you want to watch 43.81 at 2 p.m. Is price well below it? Is it right around there? If it's right around there, then we still just have this choppy market. The NASDAQ is most likely the indice that will go ahead and lead things lower out here. Otherwise, price is just coming back and testing a support area. So those are really the areas that we need to be watching to give us all the clues about what the market is going to do. In the meantime, we've got to fill up the next 45 minutes worth of the hour out here, so we'll go find some other things to go take a look at. And one of those things, let's go take a look at what's going on inside of the ETF structures. Let's go take a look at the QQQ series. Well, there's some additional things we've got to look at. How about the Euro-Japanese yen? The Euro-Japanese yen right now, because you want to see synergy. If markets are going in either direction, you want to see synergy. If markets are going up, you want to see a tailwind. That tailwind is the Euro-Japanese yen. If we have a good tailwind, maybe I go ahead and I remove the fasten seatbelt sign. Right now, we don't have we have choppy markets, so that fasten seatbelt sign stays on. The Euro-Japanese yen, if it can stay above 126.91, that bodes well for the bullish case. But if you put the other elements that we looked at and you see it close below 126.91 at 2 o'clock in the afternoon, that does not bode well for the buyers out here. Now let's go back and take a look at the ETF structures out here. Let's go take a look at the QQQs. What are they doing? What have they done out here? What have they done, Mrs. Robinson? Well, the Qs were unable to get up into the March 20th swing point. Let's go check out the index out here. Let's go see what the NDX was able to do. The NDX we don't have to deal with when we take a look at the straight index. This is the weekly. Let's put the daily out here. On the NDX, we don't have to deal with the adjustments for fees, expenses, for dividends, but let's see, did it test a swing point? Did it test a swing point? No, it did not. It got close, but no cigar. The swing point for March 2nd, that low is 44.50. The actual high that we saw yesterday was 44.48. So no test of that swing point, either March 20th or the swing point from March the 2nd. March 2nd is the better of the swings out there. Nonetheless, let's go back and take a look at the Qs. Volume yesterday, 17 million shares as it moved to the upside. The day before, 17 million shares. Well, yesterday was Monday. The prior day was Friday. All last week was a holiday week. All kinds of people still vacationing down in the wonderful state of Florida. However, yesterday was not a holiday. The Qs make bottoms with what? Volume. The Qs make tops with what? No volume. That is the pattern that is out there. And that is still the pattern. So yesterday's light volume day, in my opinion, for whatever that is worth, it just simply has more meaning when there's nothing else that can get in the way. And yesterday was absolutely not a holiday out there. So light volume. If in fact The areas that we're taking a look at really do break to the downside. The Qs ought to get back and test the swing point from March 26th, somewhere between 105.70 to 104.24. Of course, we ought to, if we're taking a look at the Qs, we ought to go take a look at Apple. What is Apple doing out here? Apple's down 53 cents, 7.3 million shares out here. Apple's been doing nothing more than just kind of traveling sideways within its market profiles out here. You've got one market profile within another market profile. I believe I caught part of John's show earlier this morning. He was looking at weeklies, I believe, and I think he was looking at weeklies with regard to light sweet crude. What he said was, not referring to John Logan, was that when you have a market profile that builds itself inside a market profile, of course, what it looks like to me is just simply a consolidating pattern. And so his assumption was that the market's going to break one way or another. So that's a cool thing. Let's go ahead, and because that's the same message we have when we just take a look at the price action of the candles out here. But maybe it has even more meaning than that. So it's really going to be critical for us inside of Apple to watch 128.58 or 123.26. A break of either of those areas, and we have I would say, a consolidation move, 121 to about 129. So you got about an 8-point move up or down, whichever way price decides to break out here. That's what's going on inside Apple. Let's go take a look at the Russell 2000, the IWM. What did the Russell 2000 do yesterday? The Russell 2000 tested the swing point high from March 23rd. That had 17 million shares out there. It was tested with 22 million shares. Typically, when you test a swing point with volume, you go back up there and test it. Well, that's what actually happened here this morning. The Russell 2000 went back up and it tested it. Didn't get to the top, but it got to the bottom of that swing point, which was March 23rd, that low of 125.79 out here. Now, the key is going to be volume. If volume comes in today, less than 22 million, most certainly less than 17 million shares, that says Russell 2000 probably heads down to the 122.23 range. Steve Rhodes with TFNN. Be right back, baby.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy, a set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
You've always taken the long view when it comes to investing, but what if there's an opportunity right under your nose? What if you could be more responsive to market trends to seek to boost your portfolio performance right now while seeking to reduce your overall risk? At Direction Funds, we connect investors with alternative strategies that seek to maximize their returns. Smart investors deserve smart alternatives. Find yours at directionfunds.com. An investor should consider the investment objectives, risk charges, and expenses of Direction funds carefully before investing. The prospectus and summary prospectus contain this and other information about Direction funds. To obtain a prospectus or summary prospectus, please contact the Direction funds at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. Investing in index funds may be more volatile than investing in broadly diversified funds. Distributed by Rafferty Capital Markets, LLC.
You know what's cool? Taking something that's good for you. Something specifically formulated to help with weight loss, better sleep, stress reduction, and the need to detox.
Nico, our hunter and gatherer ancestors found all their nutritional requirements for health in their wild environment. But today, our food sources no longer contain the vitamins, minerals, and nutrients our bodies need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, soil-based vitamins, minerals, fatty, and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated fulvic and humic acids, nature's preferred delivery system. They have been called miracle molecules because, like sunlight, air, and water, life cannot exist without them.
That's right, Paige. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge, formulated and approved by Nico and Paige of Living a Primal Lifestyle. Buy it today for just $89. Click on the Primal Edge banner on the front page of TFNN.com. Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. Dow's off 40. S&P is down 5. Composites off 26. Russell 2000 is off 6 points. Trading out at 12.59. So you got a question here that came in during the breakout here from John in Walnut Creek, California. John, hope you're having a great day. John's question is, am I correct that the VIX index went up over 10% yesterday? Yes, you are correct. And then the question goes on. It says, if so, are you expecting a bounce in the market in the next 48 hours? And the answer is yes, I am. But that bounce may have already come in. That bounce may have already come in the futures market earlier this morning. Let me show you what I am referring to here. Now, the VIX index, we take a look at the S&P, so we really take a look at the ES Mini out here. And the VIX index had a fairly nice bounce. We saw it move down into the 4 p.m. close yesterday. So where my cursor's at right now, we're taking a look at the ES Mini. And if I just simply take a look at, let me see what the wave count was to the upside. Nope, just one. Is that possible? Yeah, it was just one move to the upside. Let me get rid of that there. But what we had was a fairly nice bounce. We went from 2,085 until about 4 a.m. this morning up to about 2,093 out here. So here's how I'm going to answer that question for you. So we did get that bounce, okay? Or we did get a bounce out here inside of the S&P futures. And what I would really do is I would say that what you want to really focus on would be the following things here, John. One, like we talked about, the summation index here for the New York Stock Exchange, NASDAQ Composite, and Dow. If, in fact, those price oscillators get below zero today, that is giving us the message that we got the bounce that typically happens with inside when you have a VIX index that has a greater than 10% rate of change, one-day rate of change out there, because this would be giving us a signal that a short-term change in trend is in place out there. And that's all that I expect that it is. It's a short-term change in trend. I don't have like a Richter scale and can't really tell you just to what extent. All we can do is take a look at swing points, maybe monitor volume, take a look at other patterns out there. And that's what I'm doing. That's what I did for my newsletter subscribers. We closed out our long Russell 2000 trade yesterday, and we went short. The signals just simply were in. No idea whether the trade works out. We just have stops in place, and we'll see how things work out here. But you're exactly right. There is an expected bounce within 2 days. I'm going to then switch over because we saw a little bit of a bounce here last night until about 4:30, 4 o'clock in the morning, and I'll switch over and let these other charts, these longer-term charts, really paint the way. And of course, we'll always look at that 1508 level today inside. I'm sorry, not the 1508 level today inside the VIX index, because a close above that spells trouble out there. So thanks for the question, John. What I would also say is that off of the most recent lows inside of the S&P. Let's take a look at the ES Mini. Let's look at the 30-minute chart right now. What we have is we have a completion of an A to B. Whoops. How the heck did that happen? We have already the completion of an A to B equals CD down. Now, this is the first one that we've had since coming off of the most recent lows. Those lows, boy, that gets a little bit dizzy for you, right? Those lows coming back here on April the 6th. So today we're at April the 14th out here. So we have not seen any kind of A to B equals CD pattern to the downside form coming off of those lows at around the 2040-ish type level. Now, that means that we could be seeing a Gartley buy. I'm going to give you both the bullish and the bearish side of the trade and what is setting up here. This way, this answers maybe Steve is wrong, and the bounce that came in between yesterday's close and 4 o'clock this morning, maybe that was not the bounce, and we'll know that here. We'll know that during the. I think we'll know that during the day, because what we already have, as you can. Well, I guess we don't have the completion here of an A to B. We have the completion of the A to B equals CD on a 10-minute chart out here, but we don't have it on the 30-minute chart. But we do have what is potentially a hammer candle that is forming here, and we've got 2 minutes in order for this candle to form out here. It all depends where price. Oh, we already had a hammer candle that failed back here at 9:30 this morning. Well, we'll see if we have another hammer candle that forms. But if I go back to the 10-minute chart out here, on the 10-minute time frame, we did have the completion of an A to B equals CD to the downside. Where is that chart? Here's the 10-minute chart out here. Why didn't it? That's odd. That's weird. In any event, the 10-minute chart here, we can see, well, that's just simply because I'm just dealing with yesterday's action, 413. But we do have the completion of an A to B equals CD to the downside. We'll see if this 2076 level can hold. So, John, from Walnut Creek, I hope that answers your question out here. And when we get back from this break, it doesn't look like there's a hammer candle. Looks to me like the ES Mini next target here is 2072. 50 and a quarter. We'll see. This is Steve Rhodes with TFNN. We'll be right back, folks.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you like it does me, visit everbank.com/TFNN to find out what they can do for you. Again, that's everbank.com/TFNN. Visit them today. Everbank is a member FDIC and equal housing lender.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Trade with confidence and clarity while using the software that thousands of institutional traders rely on to make the best and most accurate decisions. Choose from 1,000 equities, currencies, and futures instruments utilizing the TAS architecture. As seen on Bloomberg terminals worldwide, the TAS Profile Scanner is a benchmark technical filtering system that thousands of traders rely on, and now you can too. For a limited time for TFNN subscribers only, we've reduced the price to just $97. That's over 75% off. John Logan hosted a special subscriber-only webinar in December, and you'll gain access to that archive as well, so you can learn exactly what the TAS Profile Scanner can do for you. Try this product out. No matter what you trade, the TAS Profile Scanner can help you make more informed trading decisions. There's no obligation to pay anything. Don't let this offer pass you by. Get your 30-day free trial to the TAS Profile Scanner today by signing up at TFNN.com. No matter where you listen to TFNN programming, we want you to know you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 8 a.m. till 6 p.m. Eastern, and you can view each program by accessing Tiger TV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right-hand corner of the TFNN homepage. You can use your smartphone to view Tiger TV, but if you don't have a mobile connection that can keep up with streaming live video, then you can simply visit TFNN.mobi in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate our audience directly and interactively through our interactive website and radio call and talk shows. TFNN is able to teach all levels of investors the technical skills needed to trade in today's marketplace. In order to get the best information possible, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com, educating investors. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. You've got the Dow's off 47, S&P is off 6, Composites off 30. Now, the cool thing is, Stevie was wrong. There was a hammer candle that did form here as we came in at 10:30 inside the ES Mini. So now that's a beautiful thing because, you know, the market, all the participants were out trading. And that says that, you know, forget about that 2072 target that I gave you if, in fact, we see it close below that hammer candle. That hammer candle low, by the way, is 2075. 75. You love to have the market, you love to have the bulls and bears paint signals for both of us. Whichever side of the market that you're on, because it's the way that the market communicates to you and I. When you see a close, when you see hammer candle get tested and hold, that tells you that's where the front line is. That's where the resources are that are defending that position out there, that specific price point. When you see that level fail, it's kind of like the front line has the front line has failed, and the question is, where's the fallback position? The fallback position, always go back and take a look at where's the next swing point. Well, in the case of the ES Mini, the next swing point happens to be another hammer that took place at 11:30 in the morning. That was back on the trading day of April the 9th, and that's at a price point of 2066. That would be your 1 to 2 A to B equals CD to the downside. So at 2066, if this 2072 area fails, that is the likely projected area to take a look at next. Now, the cool thing there is not only would you have a 1 to 1.272 A to B equals CD to the downside, and we're not there yet. So I'm giving you that side as far as what to look at if, in fact, you see a failure of that hammer candle, is that it's going up against another hammer candle. And so if that one fails, that's where the market would communicate to you. That's at 2066.75. Then you go back further and look for swing points. Well, the problem here is if that one fails, that's going to take you all the way back into the area where the market broke out back on April the 6th. That's on the failure side. On the bullish side, okay, that's the bearish side. The bullish side is this hammer candle here holds. Maybe it gets tested. We see a punch down below it and it holds. That would be your first Gartley buy pattern off of the lows out here from that April 6th, the time period out here. So we know what to be looking for, both bulls and bears, and that's taking a look at the short-term charts out here. I believe there was a question inside the den from Terry D, asking to take a look at the IBB on the 120-minute time frame. So let's go do that in a couple different fashions. IBB, as we take a look at it. Let's take a look at the 120-minute time frame out here. So let's put that up on our chart. And the question was specifically something about a 0.618 retracement and maybe some other things. So there's other information here for us to take a look at when we take a look at the IBB. Now, with regard to retracements, specifically, my eyes go to the lowest swing point to the highest swing point as I take before there's really kind of any changes in trend. So I would either, from a retracement standpoint, either be dealing with the bar at 8 o'clock in the morning from 8 to 10. This is a 2-hour chart that we're looking at. What do I have? Do I have pre-hours? Yeah, I do have pre-hours in here. I got to go with it anyway. So if I take a look at from 8 a.m., from 8 to 10 on April the 1st, if I go from that swing point low to the high out here, I'm not going to adjust my hours. The 0.382 retracements at 351. I would say if you're trading the 120-minute time frame in IBB, long or short, I think the more important thing to be looking at as we speak right now is going to be the market profiles. So you've got the IBB. So if you're looking for it to break loose or to hold, you've got this cool 120-minute time frame market profile at 355.15. What we can see is coming up off of the lows out here. The market profile support levels have not failed since the time period of April the 6th. So we're at April the 14th. So ever since that point in time, with regard to the trend inside the 120-minute chart for the IBB, that level has not failed. Right now, what's under attack is that level. If you see a close below, and this is 12 noon, when this next bar here completes. If you see a close below 355.15, you've just got an indication of a change in trend and a move down into probably that retracement level, at least the first one being the 0.382 at 351. That's not that much further down, but perhaps down around the 344 level. That's your 0.618 retracement. So that would be my call. Take a look at a 120-minute time frame chart for the IBB. If we switch over and take a look at the daily time frame and see what the profiles are on it, that says you've got support here at the old resistance line at around 349.19. So that would be another area to be watching inside of the IBB. Hope that answers your question, Terry D, inside our Tigers den. Now let's see, what have we missed out here? I'm sure there's many things that we've missed, but let's go take a look at specifically. Well, let's go look at the financial sector, right? So you had a lot of financials. What do we have? Goldman Sachs, were they out with earnings? J.P. Morgan was, right? So let's look at J.P. Morgan first. Who else, folks? Anybody inside the den? Let me see if I see anything moving on my charts. I don't. JPM, they raised their dividend. Thank you, Mike. I think there was somebody else at one of the other financials, maybe a few. I think Wells Fargo was out with numbers as well before the bell. But let's take a look at J.P. Morgan. So J.P. Morgan gapping up this morning nicely, has some good volume behind the move out here. 15 million shares. And that's trading into the swing point here from December 31st. That December 31st swing point has got 18 million shares. Boy, you're moving up into a swing point, nicely out here with volume. Welcome to Jim from Michigan, a newbie here in the Tigers den. So love Michiganders. Now, what part of Michigan are you from out there? Did you guys know that they called the folks from Michigan Michiganders out here? Perhaps not, but now you do, because Stevie's a Michigander. In any event, that's a bearish reversal signal that occurred up at that high, up at that 52-week high inside J.P. Morgan. That was the December 31st high, 63.49. It's been tested. Very cool. Frankenmuth, home of the chicken dinner. No question about that. So if we take a look at the 63.49 area, it's under attack with volume. Says price ought to be up there and at least test that area again, even if it can't close above it. Right now it's trading at 63.16. That's what's going on inside of J.P. Morgan. But let's now go take a look at the XLF. Let's go see what the XLF is doing. I don't recall the weighting of J.P. Morgan inside of the XLF, but it's a pretty decent weighting. The XLF is really not doing a whole heck of a lot out here. Volume yesterday inside of the ETF was 30 million shares. So far today, about 6.4 million shares. If we take a look at what the XLF is doing, it has done what it did yesterday. Got up to the area where it was most comfortable. That's that point of control line. 24.38 was the price. Tested that area, rejected it. It's trading back below the support level, which should act as support. Perhaps that becomes resistance. Looks like the XLF is getting ready to come back and test the swing point here from March 26, 32 million shares down there. Now, our man, Jim from Michigan, from Frankenmuth, a great city out there, he asked for some opinions on clean energy. So let's go see what we can find about CLNE. I believe that's clean energy. Let's go see what we can find. It is clean energy fuels. So Jim, I'm going to assume that you're long this equity, or tell me what you're doing. That way I can help to provide you with some navigation out here. If we take, whoops, didn't mean to do that. If we take a look at clean energy, what it is doing, it's taking out a swing point that has a volume of 12 million shares. You've done 945 today. Doesn't look like you're going to have the volume to the upside out here. Nonetheless, that was a nice high volume ish type recent high out here. Said that price was going to go back up there. That was a breakout. That certainly was some volume. That's the first sign of strength you've had inside of clean energy off of the lows from January 30th. Now, you'd like to see swing points get taken out with volume. Again, let me give you the A to B equals CD pattern out here. And in the case of clean energy, as price, so it makes a nice move on the trading day of February 27th. No idea what's behind that move other than volume, 12.6 million shares. Pulls back and makes a retracement, makes a 61.618 retracement, almost exactly. Forms a nice little hammer candle back on March the 16th. Then it's off to the races. Any close today above 625. I don't think it's going to have the volume. You'd like to see it have more than 12 million shares, but not too likely. I would say any close today above that 625 level, or at 642. You'll see price run to the 711 area out there. And I'm not talking the kind where you go get a Slurpee. I'm talking about the price projection kind. And then it heads to 772. And then when it gets to 772, I'm going to go ahead and clean up this chart for you to take a look at. We're going to go ahead and get rid of our TAS boxes out here. We're going to get rid of our moving averages. We're not going to get rid of anything else. What we're going to do is we're going to add this other line. Here is your supply line inside of clean energy. It's somewhere between 781 to 757. This is what's referred to as an open window. That becomes your target. That becomes your gap. That becomes an area where this equity began breaking down. So clean energy, CLNE, doesn't really run into any significant resistance, in Stevie's opinion, until you get to the 757 to 781 level. What you want to see is you want to see a close above 781. You want to see that window repaired, and I mean a close above it. And ideally, you'd like to see it with more than 3.7 million shares. If you don't, that's where you start to see people really get back their money, because you had a lot of folks, not a lot, but you had some folks that were buying all the way from that October 1st level all the way down to the lows that came in at $3.99. And, they would like to get their money back. So that is what's going on with clean energy, CLNE. And again, welcome to Jim from Frankenmuth, Michigan. Folks, you should check out the Tiger's Den as well. It's easy to do, and you can do that for the next 30 days. Now, back to the charts out here. Let's go take a look at light sweet crude. It's up $1.46. Let's go see what it is doing here. That's with the U.S. dollar index back fairly large as we speak. Off a full point. But let's go take a look at light sweet crude, see what it is doing. It still has this A to B equals CD pattern to the upside. That should take price into the 55.50 level out here. That's where it likely runs somewhere around there, runs into significant resistance. It's been topping out right around the $56 mark. That is likely where light sweet crude is headed. Let me put my boxes and moving averages back up on my screen. That way I'm not flying blind out here. Let's take a look at Let's look at the euro. Let's take a look at the euro with regard to the U.S. dollar index, see what we have going on out here. So the euro with regard to the U.S. dollar index, nice big old bullish engulfing candle, rejecting that swing point from March 16th out there. That's what is putting so much weakness inside of the U.S. dollar index. Of course, it's not impacting gold per se. Well, gold certainly is off its lows. What you really want to be watching for in gold, in Stevie's opinion, is that little rising price channel. Can price break back up into that level. That's that lower green line out here to say that this morning's move was a false breakout to the downside. If it can't, and we see price close below 1190.70, 1179 would be in the cards. But if it can get back above today, 1201, 1202, something like that, that would be that would be a nice rejection, and price would get back in that rising price channel and then say, okay, now we take on those highs of 1219.50, maybe even the 1256 level out there. Let's take a look at let's see what else here we have moving in the marketplace. So you got that hammer candle. That is certainly held inside the ES Mini. That's that Gartley buy pattern out there that we want to keep an eye on, both looking at bullish and bearish. Question about silver out here. Silver has turned just flat out here. So in the case of silver, the A to B equals CD pattern, that's got to be adjusted because we had a little bit of a lower low. What silver has done from low to high is made a 0.618 retracement in essence today. It got a little bit below that level, which was 1608. It got down to a low of 1595. Not a big deal out here. I think that with regard to silver, you see, I can't really, well, I can't say I can't. I can do basically anything. Let's go ahead and get rid of the retracement level. Let's see if we can really draw in a rising price channel here. I don't think it was as easy as it was inside gold. I suppose that's your rising price channel, but the problem is that, oh, geez, that was pretty horrible there. That's a bad use of that rising price channel tool with inside E-signal. Clicked a little bit too quickly there. There's your rising price channel with inside silver. So if we take a look at silver, no question, that's a good rising price channel out here. So silver also really needs to get, so it's made the 0.618 retracement. Silver's going to make its next run to the upside out here. Is that a Gartley buy pattern? It is if we see some type of bullish signal out here. It's not if we don't. You got a doji candle as we speak right now. If silver could close at 1634, somewhere right around there, it's high of the day, and not move any higher so that it truly is a hammer candle, then the answer is yes, that would be a confirmed Gartley pattern out here inside of silver. There's enough of an A to B equals CD to the downside of 0.618 retracement level out there. And then that could potentially start the Gartley buy pattern to the upside. But we don't have that as we speak right now. Instead, what we've got is silver is basically flat. The Dow's off 21, the S&P down 4, composite up 25. We'll be right back, folks.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Catch Basil Chapman as he uses his Chapman Wave methodology to call the markets. The Tiger Technicians Hour, next on TFNN.
Welcome back, folks. Dow's off 24, S&P's off 4, Composites down 26, Russell's down 4 points. So, we have some cool synergy in the markets here to give us some decent signals as to what it's trying to do. Let's start off. We're going to just focus it on the 5-hour charts here, 300-minute chart. Thanks to Saratoga Bob, who I haven't seen in the Tiger's Den here for a bit. Maybe he is out vacationing. I hope he is. And we're taking a look here at a couple different patterns. So this is a 5-hour chart. We covered this earlier, so I won't dwell too much on this. We've seen basically 3 patterns out here to be focused on. We see that 7th inning stretch, that 7th inning pattern to the upside that completed yesterday at 2 p.m. We had followed, well, really completed at 5:15 last night. That's when we got the actual confirmation of that session. Now what we've seen is we've seen price break through a rising price channel. Now this candle session does not end until 2 p.m. So we really don't, at this stage of the game, prices come down. It's testing the 43.81 level. We're below that. That's its TAS market profile support. As we speak right now, it looks like this trend here, this trend channel has ended, and we should see some retracement or move all the way back down to the lows, one or the other. That's on the NASDAQ. If we take a look at the 5-hour energy drink chart for the S&P futures, the ES Mini out here, we'll also see now it broke its price channel yesterday a bit earlier. Its price channel broke at the trading session of 5:15 the day before. Price didn't get back up and totally test that level. You'd like to see it have that, but it also had a 7th inning stretch, that G pattern to the upside, and this looks like it has further to go. Now, key level here inside of the ES Mini, we can see price stopped right at about the 20,077-ish area. That is a consolidation pattern that was in play for a while here. That's a consolidation pattern that really began back here at about on March the 30th. So from March 30th or maybe the bottom, we'll say the bottom, when it formed that morning star pattern. That was on March 26th. So there's that consolidation pattern that I was looking for out here. It's a nice move, 35, 40 points or so. That has not come to fruition. So price, when you break a level of resistance, this case here, horizontal resistance, you like to see price come back and test that area. That's what we've seen right now. It's come back and it's tested it. It's also right now in the 3-hour or 5-hour chart, it's holding right at about the support level of its TAS market profile. If it can hold this area, that's good case for the bulls, maybe not such a good case for the bears out here. If we see it close back inside the price channel, price could easily come all the way back to the breakout session back here. That was on that Tuesday session from April the 6th at 2 p.m. At this stage of the game, it looks to me like price wants to move lower. It's just running into some old support down there. Hey, if we take a look at the 5-hour chart here for the Dow, guess what? It too, right now, just like the NASDAQ, is breaking through its rising price channel, and it's found support at its TAS market profile low at 17,843. That's the number to be watching inside of the Dow futures. It looks to me like it too wants a lower price out there. We're only inside the second wave pattern to the downside, so it has further to run. And then finally, just to go ahead and wrap things up, we'll take a look at the Russell 2000. Now, the Russell 2000 is the only one that didn't get to that 7th inning stretch. It only got to 6 innings, but that's okay. Now, with the Russell, this is a 10-minute delay on this chart. My apologies. But what you can see is price is also right now finding support. Now, the Russell 2000 has been strong like bull out here. Russell 2000 thus far has found support at the bottom of that rising price channel. So those are the things that we can be looking at. There is some synergy out there. We'll know for sure if the market wants to move lower. If, in fact, we see the summation index for the NASDAQ, for the Dow, for the New York Stock Exchange, all trade below zero, and we won't know that until 4 p.m. today. Folks, stay tuned. Our man Basil Chapman is up next. Thanks so much for joining us on Terrific Tuesday. Have a great day, and I'll look forward to seeing you soon. Take care.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This is TFNN.